How about some good news for a Friday, especially when it comes to mortgage rates? And it's going to sound a little counterintuitive because sometimes bad news or bad reports in the economy actually help mortgage rates. But if you look from September 14th all the way to October 25th, you saw a slide in the bond market, specifically mortgages. What you're looking at here are mortgages that trade in the bond market. These become investments. And as people invest in mortgages, it drives the price up, which you see in a green candlestick. Red means the price is going down, and rate goes the opposite direction. So you can see from September 13th, September 14th, all the way to October 25th, it's been mostly red candlesticks or selling off of the bond market. And when bonds go down, rate goes up. So for 7-8 weeks straight, we've had an increase in mortgage rates, but not this week. Look what happened Wednesday, Thursday, Friday. Big, huge green candlesticks. We've made up almost all of the loss that we got from September 14th. Now, what caused this? Well, Wednesday was Fed Day, and the sentiment in the markets are that the Fed could be done hiking rates, meaning they'll pause, they'll leave rates where they're at for now. Of course, we would like some rate cuts, but we may not get that for a while. But just the mere fact that they may not have to hike anymore is helping both the stock market and the bond market right now. And you can clearly see Wednesday, we had a really good day of improvement here. We had some follow through yesterday, and then all eyes were on the jobs report, which comes out the first Friday of every month, and that came out today. And again, this is a little bit counterintuitive, but the jobs report was a miss. So the jobs created in the report were less than what Wall Street was expecting. And the unemployment rate went up a little bit. And while that is not good news for the economy, because that starts to show weakness, it does help the bond market and it does help mortgage rates. You get kind of caught in, we get caught in, hey, what are we rooting for here? We don't want people to lose their jobs and become unemployed. On the flip side, that's what helps mortgage rates lower. So really, it's just our job to report, hey, what's going on? We're not rooting for any one thing. But because of the weaker jobs report and higher unemployment and the fact that the Fed may be done raising rates, which would be a great sign, that means inflation is moving in the direction that we want it to move. This is what will help mortgage rates. So we had a nice recovery this week. That could be anywhere around 3/8 to 1/2 of a point, give or take, not a quote, in rate coming down this week. That's a good thing. You won't hear about this till next week in the news because the news cycle is typically always a week behind. So I wanted to bring it to you today. We'll see if it holds, but definitely some good news in the rate market. Have a great weekend.